Welcome to the Second Bite podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Hey, and welcome back. This is Todd Taskey, and I am here on the Second Bite podcast. Super excited for our conversation today. Wray from Whitebox, the founder of Whitebox, is with us today with what I think is going to be a fascinating story and a little bit different from what we usually talk about. So, Rob, thanks so much for joining us.
My pleasure. Thanks for having me.
Hey, and Rob, I want to jump in just a second. First, I want to thank the people at TriVest. I'm not sure if you're familiar with TriVest. TriVest is a private equity group out of Miami. They're our sponsor. They've been around for 40 years. They're always on the list of founder-friendly private equity groups. They've got 3 really great funds that are targeted at founders and family-owned businesses. Their Discovery Fund is a great fund that I use because it's a $1 to $4 million EBITDA focused fund, but they will take companies like that and allow them to be a platform and then help them build on top of that. They've done over 300 transactions in 40 years. They're a really great group. You can find them at trivest.com. They've also created some resources for people that listen to Second Bite. So if you go to trivest.com/second bite, you can find out more about TriVest. You can ask for some resources. You can do all that kind of stuff. So thank you to our friends at TriVest, and Rob, thank you for spending a little bit of time with us.
Sure.
Hey, so you and I have known each other for a while, and I have been able to watch Whitebox grow into really what it is today. I think you really kind of started before e-commerce was the thing that it is today. Just to give our listeners context, can you talk about what Whitebox is, who you serve, and what you do for them?
Yeah. So Whitebox, really, we're an e-commerce technology company, and there's 2 pieces to what we do. One is that we help brands specifically sell more stuff online. That could be through creating a better marketplace positioning. It could be through executing better ad strategy. We have a whole data science team that looks at the way brands are selling their products to help them make all sorts of better selling decisions. And then the other thing that we do is we handle the logistics of e-commerce. So we have dozens of folks that had come from the Amazon world. We've built up a massive logistics network that's all driven by technology that we've built. And this technology is the underlying thread that goes through everything. And so our thesis is that by doing both the moving and the selling side of e-commerce all under one technology platform, one piece of data science, we can way out punch our body weight and do an extraordinary job that our competitors can't do by helping brands lower their costs and sell more stuff.
And so you've got some large brands, but also smaller brands as well, right? Do you focus on one versus the other?
We've built a tech platform that allows us to do both. And so I think I would say, we're not going to go help someone that is still operating in their garage because there's a certain amount of work that it takes to get a brand up to speed. But I'd say like an early stage venture backed company would kind of be at the or maybe a bootstrapped company that's kind of outgrowing their first warehouse or outgrowing their first data. Maybe they've brought on an ads team and they're outgrowing their first ads team or ads platform. So I'd say we're at mid-size and up e-commerce companies.
And where do you fit in that great conversation between accelerators and aggregators? Are you one or the other camp or a combination of both?
We're very much an accelerator. I wouldn't call us an aggregator at all. Like there's tons of companies like the Purchase and the Theracios that have gone out to go raise billions of dollars to just go roll up as many brands as possible, and then try and basically help them grow through economies of scale. We don't do that. What we do is we build technology and then work with these brands to integrate our technology into their companies to help brands grow. And so we ultimately want to be the technology that brands are using to grow.
Yes. And so let's do just a quick brag from that standpoint, because your revenues and your sales and everything have just, you know, skyrocketed. Whatever you can share, just to put that into context, you're riding this big wave of e-commerce from where you were just a few years ago. How do you describe what the revenue growth is?
Yeah, I mean, it is just extraordinary. So, like, I can't. I'm on the board of the company, so I can't particularly talk too much about numbers. But just to give you a rough idea, about 2.5 years ago, we had one 40,000 square foot office with, I don't know, 10 or 20 employees, and now we're well into the many hundreds of employees with 1 million square feet of storage in Maryland, 1 million square feet of storage in Nevada, a little bit of a smaller facility in Memphis. I mean, and these are massive facilities that uh, have parking for 70 tractor trailers and about the size of a professional football stadium. So I'm talking a lot about logistics, not because it's so much it is one of the things that we do, but it's easier to visualize the logistics element
Yes.
than it is the data science side of our business. But the data science side of our business, we have a team of software developers and data scientists and PhDs that are ingesting billions of these data points to go make better ad decisions. So
And your customers don't really care about that. They just care about more revenue, more product sales, more results.
you know I think the smart customers do care about that. But they don't care about the billion data points. They would care about the insights that it says, well, hey, here's who's buying our product. Here's how we can more efficiently attract more of those customers. Here's how we can go get this customer to go tell their friends.
Yeah.
The types of insights that we can deliver from our data, that's what our customers care about.
Got it.
And of course, everybody wants to go report a good number to their board or their investors and their teams, and be able to pay themselves well. But at, at, at at the end of the day, if you're trying to think 5, 10 years out about how do you build a good, healthy company, you really need to be looking at that data. It's kind of like it's kind of the crystal ball about how do we become a better company 5 years
Right.
from now,
Right.
are the insights that come from the data that we collect.
So the thing that I was hoping that we can get into, and please share with me as much as you can.
Sure.
So it's just the process of a lot of our folks, we help with the process of doing a transaction and selling a majority of the business. So you've gone out and raised, and this is, been out in the press, but in 2019, you raised about $5 million, right? And then in 2020, you raised $18 million. The storage space you have, the warehouses, the people, none of that stuff is cheap. So can you tell me what it was like when back at the beginning, when you raised a kind of a friends and family round, that's when you and I met. Tell me what it was like though when you raised the first 5 million. What did you think about $5 million? What surprised you about the process? What was the kind of the biggest learnings and takeaways? Whatever you feel like is important to share there, I'd love to hear.
I think the more poignant memories, probably even the first million of fundraising. I think it is shocking how hard it is. Everyone's going to tell you, look, you're going to have all these people that tell you no. Uh, that's a thing. You're definitely going to get told no a lot. I think the complexity and the depth of knowledge, like so because you're going to get told no 100 times to go raise your first million, you're going to be asked 1,000 questions, and after a while, you start to see patterns. But every now and then, you get a lot of really questions that are out of left field, and sometimes somebody's asking one thing, but they really mean another. I think that in order to go raise that money, certainly once you get into the $1 million range, you just have to have an extraordinary depth of knowledge around the competitive environment, your operating model. Um, it's and then a deep network or advisors that can go help you find those investors, because people that are willing to write that size check. You don't just run into them at a Starbucks unless you live on Sand Hill Road. So like, uh, oh, I think the other thing is like, the amount of pressure. Like, I guess it all depends on your own personal financial situation and your own family structure and what's happening there. But the amount of pressure that comes in that type of fundraising environment is, some people probably handle it better than others, but it's quite psychologically taxing.
Sure is.
Uh, for me, when I was going to go out and raise the first $1 million, my net worth. So for MP3 Car, which is my second company, at one point my net worth had gotten into like the negative 500 grand. Um, and then I went and dug myself out of that hole, built a bunch of tech to dig ourselves out of the hole, which kind of became the foundation for Whitebox. But in order to go build that, I'd once again highly levered myself up personally. So if this failed, failure was not an option. So like, the amount of stress that went along during that fundraising period, because I'd levered up so much personally, was quite significant.
Now, so in 2019, that was so you raised friends and family, right? A lot of folks do that.
Yeah,
But then you raised $5 million. It's a big ticket. You
yeah,
raised it from a few smart funds and people.
yeah, yeah.
Does that allow you to take any money off the table?
Yeah, so there have been points in the company, where I've been able to help pay back some of that personal debt that I brought on board, and so that's certainly been nice for the family, to be
Wait, in
able
that
to go
very
do that.
first round, your A round, were you able to take cash off the table then?
I was, yeah. We had some really good angel investors that saw the financial position that I'd put myself in to go
Uh-huh.
start the company, and they were like, "Hey, Rob, we're happy to help you out here." And so, uh, but it also worked out for them because they were able to buy some stock at a really great price too. So
Good point. What, so you raised that, and then it was, I guess, about 18 months or so later. So it was like September of 2020 that you raised. So September 2020 strikes me as, wow, that's middle of COVID. And you went out and raised $18 million, right?
yeah,
Now,
yeah.
e-commerce is really now starting to explode. So my couple questions are, did that give you another opportunity to take cash off the table? But more importantly, what differences are there between raising 18 and raising 5 and being a little bit more established and having a kind of a track record and all like that?
So so I think Marcus actually. So I think one point we're leaving out, which we're happy to get into more a bit later. About 2.5 years ago, I brought on a CEO to run Whitebox, Marcus Startzel.
And that's
Um,
between A and B, right?
so he came on just before the 5 million that you're talking about. So
Okay.
Marcus went out and and actually did that round, and he also did the $20 million round too.
Okay.
Now, certainly, I was involved in supporting that role, but Marcus led that charge for both of those
Yeah,
rounds.
we'll come back to Marcus in 1 second.
Yeah, yeah. So I'm sorry, your question about between the two rounds,
Yeah, was
like
there
so.
a bit difference between the two rounds? Is there a significant change because you're on your B round and because you've got a brand name, big time CEO, and you've got momentum and all like that?
As a board member, as an observer, I think there's probably slightly more scrutiny between the 5 and the 20, but it's not as drastic as the scrutiny that comes from a small friends and family round to a professional venture round. So like I would say that's where the spread is, right? You go from your small angel investor, friends and family round level of scrutiny to that $5 million round. We got some really, really smart uh, professional venture capital investors
Mhm.
that left no stone unturned.
Right.
Uh, yeah, so to go from that round to the 20, um, wasn't as big of a jump because that we had
You were
just
prepared.
basically we had to get our house in order for that first five, and then getting our house wasn't still in order. So
Is
you
there
know
a lot of is there always pushback on valuation? Was there as much pushback on the second round as the first round?
I think it's all about like your results, right? So like and can you build a competitive process around it? And I think Marcus did a phenomenal job about that, and I think the team's been doing a phenomenal job actually producing the results that let us get to to a healthy valuation.
Yeah. And so now you founded this company,
I
right?
did.
You're the brainchild.
Oh,
You're
well,
the,
along with like I have two co-founders really that I wouldn't be here without them, Sean Clark and Steven Jensen. So Sean kind of led the technical house of our business, and Steven led the operation side of our things in the early days.
you're both with the business still.
Yep, they sure are. Yep.
And so at one point, I assume the three of you guys said, wow, we need a powerhouse or a real CEO, or did the power of that first investment round say you're never going to raise money without a guy like Mark?
Well, so a couple things were going on at the time. So my daughter was just born. I had had some crazy health issues. Um, I was really a first time venture backed CEO. Um, and uh, the board came to me and said, "Hey, we have a few candidates. Now, certainly you don't have to do this, but you've got a few candidates here that you might want to consider. You very well could go and knock the cover off the ball, be a, I think it's very much the exception that you get the Jobs, the Zuckerberg, the Bezos that take it from garage to,
Yeah, Bill.
massive company. That's very much the exception. And so I think part of it, to protect my ego, to be honest, was, hey, you very well may go do this yourself, but you could de-risk yourself, and we have some awesome candidates that we've happened to have worked with before that you should just talk to, think about it. Um, and ended up having a great chat with Marcus and thought, hey, if we can get him, we should totally do it. And the board worked with me to help uh, recruit Marcus, get the deal done, and all that good stuff. So
And so were you at all caught by surprise at the suggestion that we should get a different CEO, or do you fashion yourself as a technologist and not a quote unquote people manager, operator, logistician, or whatever that lingo is?
well, so I like to. I think I'm always been a learner, or I've always been a student. So I like to study and think a lot about things, and I like to get people's advice because ultimately, like my first MP3 car, I was a massive failure, and it almost was the end of me. Like it was horrible, horrible, painful, and that experience really led me to go take feedback a lot better. Um, and so your question was I surprised by it? You know, I think I'd be lying to say it didn't bother me. I think because there's so much media that goes around the Zuckerbergs, the Bezos, the Jobs, um, that it's almost like, well, you're a failure if you don't run the ball to the end zone by yourself. And to be honest, that was my knee jerk reaction of like, what, you should interview these guys. And I'm like, what? No, I'm not gonna. So I think that was like, I was probably thinking that, but I was receptive to the idea at the same time that they said that, and then that basically went and it triggered this learning experience for me where I went and talked to a whole bunch of people and I read extensively on the topic, and you've got the Reid Hoffmans of the world that left LinkedIn and became LinkedIn of course became phenomenally successful, and on the flip side of that you have the Ben Horowitzes of the world of like, well, it's much easier to go teach leadership than it is to go teach a visionary, because and so I I probably read both sides of those arguments until I was blue in the face.
Did
Um,
what did your partners think? Your two co-founders.
they were supportive of whatever I wanted to do. I mean, they didn't they didn't if they had a strong opinion, they didn't voice it to me at the time. I
Okay.
think I think if they had which probably yeah, I think they were supportive of whatever I was going to go do,
Yeah,
because I mean, ultimately, I had so much of my own cash invested in the company.
right.
Uh, I think they were just, for whatever reason, just supportive of
Yeah.
whatever decision I
And
decided to make,
were
and
you
they
guys,
knew I would research it
yeah,
extensively.
were you guys roughly a third, a third, a third as partners?
Um, I don't really. So I don't know that I feel comfortable diving deep into the cap table structure, but um, I took no salary for many years, and I funded all of their salaries, uh, even through the early days. And I put in massive amounts of my own cash. So no, they were not a third. That conversation was certainly a point of contention. Um, but I made massive financial sacrifices with no salary for the beginnings years, and anyway, so no, that wasn't how it worked out. But
Got it.
um, yeah,
And so now you've raised 23, 20 something million dollars, right? And you've got institutions in there and you've got a professional CEO. How has that changed? And so now you're um, in a C-suite role, right? How has that changed your day to day, and how has the company become better and stronger through that process?
oh, well, so my day to day, so at this point, I'm the CIO of the company, so I handle all sorts of, like, of our tech infrastructure. Um, and so how does that impact the day to day? So my day to day is certainly a lot less stressful. I'm not out fundraising. I'm not out, you know, um, yeah, I think that all CEOs today are really earning their stripes, right? I mean, you've got, like, massive, uh, economic uncertainty. You've got COVID stuff going on. There's, like, inflation issues that are happening. Crazy stuff's happening in the labor market. People are working from home. How do you create team alignment? And so that's all the stuff that the CEO has to basically take front and center seat to do. And I don't have to do that. So uh, and Marcus has done this many times before, and so for him, he's like, "Oh yeah, I got this. I've done this. Like, I've done this. This is we're good to go." Even though, of course, none of us have ever done COVID before, having been the CEO a handful of times before, it's just like it's probably similar to other curveballs you get thrown as a CEO. Just like we're just going to roll with it. Um, and I think the other thing, see, you asked how does that impact the company? I mean, I think that by bringing in talent, like by bringing any senior leader into the company, it allows us to attract other senior leaders to the company that we may not have otherwise been able to recruit, because it's like, oh yeah, this guy's a winner. He's done this before. I want to go be part of a winning team. And I think the more smart people that we get on the team, the more it attracts other
Right.
smart people, and it just creates this culture of it just adds to the it's a cultural, I hate to say the word flywheel, but it because it's but it's just like adding senior leaders, just add more of this caliber, just allows you to get more senior leaders of that of similar
And
better
so,
caliber. And I actually think it starts with the board too. You know, like I
yeah,
think your earlier investors, you know, really, and because they're also helping you think through the early hires too. And like, is this a good fit?
because those are critical, right? The early ones.
Yeah,
And
yeah.
so when you think about the massive failure that MP3 car was, and the massive success that Whitebox is on the road to, can you point to anything inside yourself that is dramatically different or caused a different outcome this time?
Well, I think one thing I talked about before was just that I I I certainly became much more thirsty to learn after that failure, or willing to learn. I kind of had my hard headedness beat out of me with that first failure. some of it anyway. I don't think I had all of it. If you asked my wife, she would definitely tell you it didn't all get beat out of me.
Yeah, they always do. Yeah.
Um, but I think one of the other big mistakes that I made the first go around, I think I had two mistakes that I think I'll bring up. One is I was very guarded about some of the stuff. Like I'd say, oh, I'm not going to go share this idea because if I go tell so and so, I don't know them all that well, and they're going to go steal my idea, right? Or they're going to go like, and so I was very guarded and untrusting uh, in the first company. And I think if I had have been a little bit more open, I think by being open about what I was trying to do in Whitebox from the very early days, I think it allowed me to get a lot more rapid fire feedback iteration on the concepts about how I was going to structure the business. Um, like feedback, hey, this is stupid. This is a great idea. Uh,
Yeah.
you know, and uh, and I think in doing that, I got not only did I get the good advice, I think I got people that were then rooting for my success. Um, I think the other thing that I did differently this time around with Whitebox was I got other people's money, and the other people's money, the money by itself was important and actually critical for me because I wasn't in a financial position to fund the company myself. But I think even if I was in a position to go fund the company myself, I'd probably still give myself the advice to go take some money because the intellectual rigor that goes with having to put together an idea and an operating model and a pitch and market research, and if you can go get someone else to go write you a check, you know the questions that you will get asked during that process are extraordinarily valuable. I mean, even those people that say no, I'm not going to give you money. There's something to be learned from those questions. Like, why do they say no?
Right.
Like, what can you learn from those questions? What am I missing? What am I missing? Right. And so, not always do you need to react to that, but I think because I mortgaged my house and because I took this friends and family money, because that with no questions attached to it. Like I took money that basically had no questions. Like, Rob, you're a nice dude. Here's a big check, right? And I got no questions attached, no questions of any seriousness attached to that. I didn't have to go through that intellectual rigor of figuring out what is the framework for a successful company.
And that was in your friends and family round. That changed on your first professional round.
That was in the friends and family round for MP3 Car, the company that failed.
Okay.
So I would say all of the friends and family money that I got for Whitebox, what, what asked like they asked serious questions because those were all big checks.
Yeah.
You know, the MP3 Car money was a couple hundred grand, right? That I'd raised. The you get into the angel investors where people are writing a couple $100,000 million angel checks. You're going to get serious questions there, and I got those. And my point is that the first time around with MP3 Car that failed, I didn't get those questions, and I think at my own peril. Like I wasn't forced into the rigor of thinking things through.
And as you went through that rigor, at both of those levels and perhaps even your last one, was there anything about that process that really surprised you? The intellectual firepower, the granularity, the complication, anything like that surprised you?
Um, hmm. Nothing that particularly stands out, other than there's just a lot of complexity. And I wouldn't say it's in any one particular area or that it surprised me, like one particular thing surprised me. It's more just like that there is a lot of complexity and and it can be overwhelming at times without resources like advisors that you can call on and be like, hey, this seems weird. Is this really the way it's supposed to be?
Yeah.
Uh,
And
um, yeah.
I'm sorry, I was going to ask, so how do you guys now kind of think about what's next? I would imagine, I mean, you've had tremendous growth, e-commerce and the partnering that you do with brands is accelerating dramatically. So I'm sure there's people that knock on the door all the time and say, "Hey, we'll put in more money." I guess I'm going to ask that as a question. Do you have investors saying, "Hey, how about your next round? We're in." I'm
Absolutely.
sure.
We get those emails and phone calls all the time.
Yeah, and you must get the same thing to say, "Listen, we want the whole company." And so,
Oh yeah. Yeah.
is there more runway that you want to continue to grow the business, and will you raise more money and get bigger and bigger and bigger, or for you, do you think there's an exit at some point? How do you think about that stuff?
Yeah, I mean, e-commerce is huge. It's trillions. It's $1 trillion, market, and growing really quickly. If you look at e-commerce overall, it's still a fraction of retail consumer spending, and so there's a lot of room left for e-commerce to grow. I think from a board perspective, we have board members that have IPO'd companies, and we have board members that have grown privately held billion-dollar companies. And I think the overall theme is that we build a good company that's generating good results, and it's a good place to work. Uh, you know, there'll be lots of good options for all the shareholders. And by the way, everyone's a shareholder at the company. So we're kind of all in it together,
Hmm.
so that we all take a piece of the success, from an equity standpoint.
And unless I've missed it, you haven't done any acquisition as part of Whitebox yet. Do you anticipate doing that at any point in the future? Or are there parts that you would extend out to offer more services to your clients?
Well, potentially, I think there's always an opportunity for that. Yeah, either to acquire technology or talent, and I think that's always something that's in our leadership team's periphery.
Yeah. There's so much. I saw in the news that Pattern the other day, last week, a couple weeks ago, raised a couple $100 million. There's a bunch of money coming into the space. And you guys, I think, are early and a leader in the space. Is there pressure to take more money to stay competitive, or do you have a plan that you need to execute against, and at some point, click, we need more money to go do those things? How does that work?
Yeah, I think I think we've got a great plan in place. And is there pressure? I think that um, as I said before, like we're always getting emails that are blowing up our boxes about, hey, we'd love to invest. And so uh, I think it's important to play your own game at some point. You can't drive out looking out the rearview mirror at what your competitors are doing. So
Right. When you see something like Pattern, right? Do you say, "Wow, we got to go do something too because these guys are coming," or do you say, "Wow, look at the value they got, man, this is great. It's a stamp for the industry. Everybody's, like you said, it's an enormous industry." Do you ever
yeah,
do?
it's very much a stamp for the industry of like, yep, we're in the right place,
Right.
and all boats are rising. I mean, that's kind of what I see when I see personally. Other board members might have another take on it, but I personally see, yep, we're in the right spot. Uh, E-commerce is growing. Yeah. So
I think so. Faced it
and I
right.
think the other thing is, like, I'd say that anybody, like, we've been building this technology for more than a decade, right? And so, like, this is stuff that we've been thinking about and building for a very, very long time. And so, to some extent, these companies that are going out to go raise hundreds of millions of dollars are to some extent playing catch up that we don't really need to do.
Well, I also think, when you look at some of the raise in the space, and then you look at where Whitebox is on 20 something $million, it's really incredible, right? I mean, really incredible. So job well done there.
Oh, thank you.
You're gonna, I think as Whitebox becomes, I'll call it famous, more and more famous, you'll have more and more people ask you, "Geez, Rob, give me some advice. How did you do it? Blah blah blah." As you look back, and I think having that failure first, and now having this kind of success, if you were going to try to crystallize that into a couple of takeaways, two or three takeaways that absolutely made the difference for you or you would absolutely do next time you go around and do whatever's next? What do you think those would be?
Um, I think a couple things. One, which some of which we've already talked about, like, you've got to embrace learning, talk to everybody that you can about that has a little bit more experience than you can. Even people that you aren't connected with, try to you know, get an audience with those folks. You can get some advice on your idea. The earlier you can talk to those folks, the better, because then if you have a hard problem that comes up, you've already established that relationship, and then you have somebody to call about a hard problem, or maybe it's an investment question, or maybe it's, hey, can you give me some feedback on my pitch, right? Anyways, so I think learning and embracing learnings is ultra important. um, I think the the first people that you get, the people say this all the time, but the first people that you get on your team are extraordinarily important as well. And so that's like your co-founders, of course, first hires, um, board members, first investors. Like, if you have it all, the ability to select that in the early days, I think that is like, these are the people that are going to be hopefully shoulder to shoulder with you through the thick and thin of it.
So let me double click that. So let's
Yeah,
assume you do have the ability to choose those people,
yeah,
right? That means that there's many to choose from, and you've selected a few.
yeah.
What would you advise people to focus on as a key determinant when they make that decision about who their partner or investor is going to be?
Yeah, I think, well, a couple things. One is I asked a lot of people about, hey, I'm thinking about starting this new company. What do you think about it? Right. So I talked to as many possible people as that would listen to me in the early days. And out of those came, a handful of folks of like, hey, keep me posted. I'd love to be involved, if you go to do this. Right. And so I think that's where the selection, or hey, I'm not going to do this, but you should go talk to my friend. They'll go, they might be a good person for you to help you with this. Um, and so anyways, that's, I think, how you build your bench in the early days of either advisors or hires. As far as selection criteria, I really think that comes down to your own personal values, um, and what's the culture of the company that you want to create, right?
And it sounds like building a bench is an interesting thought, right? Because you build that bench before you need the bench, otherwise you don't have it.
Yes, that's right. That's right. Exactly. But I think that once you've got your bench full, then you need to think about like what's important for this industry, right? Maybe you want somebody with industry experience. Maybe you want somebody that you're going to have a good rapport with, right? Do you like to hang out with this person? Could you see having a beer with this person, or whatever you do? If you're an athlete, could you see going to go exercise with this person, right? Uh, um, so, anyways, I think it's like, could this person, will I get along with this person? Do our values align? Um, what's their experience been? I think experience is also a key piece. Then I think these people are so important that you get in the early days. I think getting unsolicited references about people is super important. So, like, the most of the early people that I would hire, I would go look them up and figure out, like, who do I know that knows this person that's not on their reference list, and go to, and I would give them a call and just say, hey, I'm thinking about working with so and so. Is there any reason that would give you pause to go do that? Anyways, so I think that that's the selection criteria from. So it's values, like personality alignment, uh, knowledge, and references.
That's helpful. And so let me end with this, as I typically do. You've been very successful in your business life, especially recovering from the early beatdown that you suffered. You've been, I know, successful in your family life and your community life. Is there something that you would point to, whether it's a book, whether it's a mentor, whether it's an experience, that you would share that has had a lasting impact on who Wray is today?
Yeah, I think there's a handful of folks I, that have been really so. Other than all the tips and stuff that we've already talked about, I think one of the first jobs that I got when I got out of high school was working for a small business owner, Sal Turkel.
Oh, say it again. Was for who?
His name's Sal Turkel. I don't know that his business is even in existence anymore, but just working for a small business owner, I had no idea that I could be a small business owner when I got out of high school, and so that kind of opened my eyes to that. My first company was a computer repair company. There were hundreds of these small business owners that I worked with during my computer repair days, where I was there at the office late working with these business owners. And I was a very rough kid coming out of school from a tactfulness standpoint, I was very much a computer nerd as opposed to so I was very much a computer nerd coming out of high school, and those small business owners helped work off the rough edges. Andy Meister was a huge mentor of mine from MP3 car days, and I think without him, I would have had a significantly harder landing, and Whitebox wouldn't be where it is today. There were a bunch of folks over at TEDco and the Emerging Technology Center that were helpful, like Ron Diegelman, Neil Davis. Carl Grover came to us from TEDco. TEDco had this cool program where there was a loaned executive, and so Carl actually used to run the Residence Inn brand for Marriott, and so his leadership skills from Marriott very much helped define our early culture. Another buddy of mine, Mike Nahorniak, ran a software company, and so he really helped me think about what the tech that we were building from a SaaS standpoint. And then, of course, our board members, Steve Root, Chris Brandenburg.
You've got a great board, really do.
Yeah. And then I also did something called Vistage for a while. I had a Vistage coach named Ed Robinson, who I just actually had lunch with today.
Ed Robinson?
Yeah. And so before I had a board, him and some of these other business owners very much acted as advisors to me to help think through some of these very early structure and cultural problems. So, I mean, I know I've spouted off a lot of names here, but I think it's really just like, again, building that bench of people that can help you as you're going to hit a wall, and who can help you climb that wall.
Right. And you mentioned Ben Horowitz, right? And he wrote a great book called The Hard Thing About Hard Things.
Yeah.
If I assume you've probably read that. I've read that.
Yeah.
It's a terrific user manual for entrepreneurs that are grinding through the things that I'm sure you have.
Yeah. Another cool book is let's see. You know what? I don't quickly have it here on the shelf. Venture Deals. Another really awesome book. Like, this is like if you're trying to figure out deal terms. Have you ever read this book?
I have not.
But Brad Feld, Jason Mendelson, like, for anyone who's raising venture capital for the first time, a friend of mine, Jack Hirsch, he raised a little bit of venture money before me. I asked him for advice. He said, "Go buy this book." Probably one of the best books that.
Geez, all right. So we end with a great tip. Rob, you're very generous of you to share as openly as you have. It's so exciting to see Whitebox do what it's doing. I would imagine we'll hear more great things about Whitebox in the future. So thank you so much for taking time, and thanks to our friends at TriVest for sponsoring this Second Bite podcast.
Thank you for your early support.
You bet, Rob. It's I'm sure it'll pay off really well. It's been fun to watch it from somewhere in the front row.
All right. Thank you.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.